Jon, welcome to Validated.
How's it going? Excited to be on.
So there's a whole bunch of stuff I want to get into. So you're one of the co-founders of DBA. You've done a bunch of other stuff, I would say. You have a reputation that maybe 4 years ago I would call Solana skeptical. I don't know if that is maybe accurate. And then I would call yourself maybe now slightly Ethereum disillusioned. Is that a fair statement?
It's a pretty accurate arc, yeah. Yeah, I've heard the same descriptions from people who I used to work with at Delphi too, who I remember were tweeting out, I think it was probably a couple months ago, when a bunch of people were getting annoyed at me lately. And they were like, I genuinely thought this guy was an ETH maxi 2 years ago. So yeah, times have changed.
It's good. So, I mean, one of the things I really enjoy is talking to people in crypto who change their views on things, because it's hard to find. There's a lot of politics band camping, I think you see nowadays. So Justin Bonds had him on a few years ago back when this was the Solana podcast, talking all about kind of his transformation on this. So I kind of want to start off with a little bit of background from you. How did you sort of initially get into crypto? How did DBA come about? And then kind of get into a little bit more of how you view the world and think about things and sort of your evolving theses over the last 3 years.
Yeah, sure. Happy to. And yeah, the arc of how I got into it, I think also will end up explaining the kind of arc of, I'd say ETH towards Solana and a bunch of other projects over time where I've spent my time.
Great.
I had a super just trad background of prior to crypto, up through the early part of COVID, I was working just in structured credit banking. I was totally outside of crypto. Crypto was not even a thing that was really an interest for me, that I hadn't really spent any material time on until basically that really early part of COVID was when I started to get into it there. The very usual TradFi bro way of it was right after Paul Tudor Jones had basically said that, hey, this is an okay thing that you can go buy. And you're not going to get fired from your TradFi job for saying that you think crypto is cool. This is a real thing now. Basically after that, a lot of people, I would say, who worked in finance circles just started to pay a lot more attention to it, myself included.
There's nothing quite like price going up to get TradFi to say something's okay.
Yep. The first Bitcoin that I ever bought was right before Bitcoin was breaking its previous all-time high from the last cycle in that it was the mid to late 2020 or whatever, when Bitcoin was 18, 19K, something like that. I bought it right before it was about to break all-time high. That was when everyone was getting interested in it again.
Yep.
So got into it that way. So that was really just my interest for the next, call it year, 2 years, something like that, where I was someone who is naturally just very interested in geopolitics, what's going on in the world. So it was very natural that Bitcoin was just becoming very relevant in there. So I spent a lot more time on that. Then from there I was working in finance, but someone who always had interests around just frontier technology type stuff. So all of DeFi just made a ton of sense to me right away. You go start playing with that and you have a TradFi background and you see all the inefficiencies of what I'm doing every single day working in banking. And you're like, oh, this stuff just works and it's very quickly. And I have my money and I can move my money and I can go do a thing with it immediately. All of that just clicks and nerd snipes people really, really quickly for obvious reasons, myself included in there. After I was doing that, so I had it as a hobby for probably I guess it was a year and a half, 2 years, something like that. Where by the end of it, it was just an obsessive hobby that I was spending as much time on this that I was spending on my real job. The thing that really clicked that it took a while for me to realize was you can actually come into crypto as someone who's just very new to it and make a difference if you really just pick the right areas and really focus on them, just because of how quickly things are changing. Where in banking, that's just not an idea that exists. It was, the stuff that I was doing, it's the same for the last 20 years. Yeah. It's a very straightforward, everyone is doing the same thing. It's just built up experience over time. Once I started to realize that crypto was just totally opposite, where I can come into a lot of areas and just spend a ton of time being super obsessive about very specific things and actually make a difference. That was the part that convinced me to switch from, okay, this is a cool hobby to, oh no, I can actually go do this as a real job, because there are things that I think I can actually be good at if I spend a lot of time in the right niche areas. And so that's what I did. Was in particular the stuff that nerd sniped me early on was a lot of just kind of low level infrastructure stuff of how do these blockchains work? What is the right way to scale these blockchains? It was all the classic, roll-ups versus Solana type of arguments. That was all the stuff that got me in. And so the first place that I worked at was I went to Delphi. doing research there, had a ton of fun there. Wanted to go there in particular because it was a place that was clearly going to give me just like a ton of freedom, just go explore whatever the hell you want, go whatever, write about whatever's cool. And very naturally, I would say that was actually a lot of what led me into the kind of Ethereum side early on. Was I would say a part of it was then compared to now. Most of the serious, interesting stuff I would say was on Ethereum compared to now. So that also explains part of the shift is like there's just more interesting stuff happening on chains like Solana now than there were a few years ago to me. But a lot of it really was just I came in as a person who a lot of the stuff that interested me early on was just I just wanted to go learn about how all of this stuff works. It was reading and writing research and just like going and talking to a bunch of people like what is the right way to build a blockchain? How do you go build all this stuff? I was super interested in DeFi. And so very naturally, I think all of that stuff pulls you into Ethereum for a mix of obviously on the application side, it like had all the old school DeFi was all kind of born there. And then on the very kind of just educational research infra type side, all of that was super built out on Ethereum, where that was just like has not historically been the culture on Solana of it's a much more engineering product focus, which is great for shipping products, but is just very different for, as a newcomer coming in that is like getting nerd sniped and wants to just like read about how this stuff works. That depth of knowledge in that community was definitely in Ethereum. So that was very much where I got drawn early in. And then over time, have obviously like went through a progressive arc of, part is just meeting more people and understanding how these other systems work. And then also a lot of the cool stuff has been happening on obviously Solana and other places.
Yeah, it's kind of interesting to me that like you have this in crypto, sometimes like a big sort of anti-college vibe, like, oh, you can just drop out, you don't have to go to college. And then like so much of crypto feels to me like college. Like people don't get abstractly excited for papers about theoretical ways you could maybe address an infrastructure problem in like pretty much any other industry except maybe like particle physics. And it's always interesting to me that there's this very strong like research and sort of academic approach that's like part of the Ethereum community. And that has been such a strong place to pull people in. And, for years, I thought that was something Solana was really missing. I think it still is something Solana misses a bit. But I thought it was like sort of necessary for success. And it turns out that it is actually, the story of Hyperliquid turns out it's not at all necessary for success. So I'm kind of curious, like, as you got into the space more, like, what got you maybe not less interested in the Ethereum world, but like drew your attention more away into Solana, Hyperliquid, a lot of these new up and coming chains as well?
I would say that started to happen in the like really in the early to mid parts of DBA. And so part of that I would probably attribute to just moving into an investor seat versus I was explicitly in a research seat before, where it was just absolutely not a part of my job of, go find cool investments, like where are the cool investable new opportunities being built, versus at DBA, that is like very obviously just that is literally the main part of my job. And so part of it, I think, lends itself to is just that is when you have an area that's just building something, which is just way better suited for it. Hey, just go build products. Like this is the culture here. People we're just, go ship applications, go try new things. Naturally, there's just a lot more exciting stuff there happening on that are like potential new investable opportunities. We're at the extreme end of that today, where I would say like most of the random new things that we see, whether it's a prediction market or a financial application or whatever, like it's usually just on Solana today. That is the number one place where we're just seeing most things today. And that's obviously been a progressive shift over the last couple of years, but it already started to happen like a year or two ago at least. But really a lot of the stuff that got me into it at first was just, it was really at the technical level of some level of technical level, like disillusionment, feeling like being gaslighted at a certain point, where it like the thing to me was just very simple. It was that like mid 2023 area, right before the market kind of took off or anything, just depths of the bear. And like the only thing that are left in the industry is like it's Ethereum, it's restaking, it's ZK technology. Like this is the real stuff, and there's like nothing else going on. That was like what people thought. But if you started to have like any view of, all right, people are going to start to like use this stuff at some point soon, and you just literally looked at like any of the basic scalability numbers, it was just incredibly obvious. That was like, all right, if anyone starts using any of this stuff anytime soon, Ethereum and all these rollups, like they're basically just going to break. Like this just isn't going to work. Is like, even the aggregate of the L2s is like, all right, what are you going to get? Like 100 TPS maybe across them, and they're going to get really expensive. And that was exactly what we saw happen. Was in that like later part of 2023, usage started to come back. All of the rollups immediately just got like super expensive. The activity went to go to, okay, we need a faster, cheaper place. Solana was the best positioned kind of coming out of that market. So it was a mix of like, honestly, the early part was actually from the infrastructure nerd level of it was just, hey, I'm looking at the numbers. I heard all the numbers that you guys promised us for the last few years of rollups are going to do 1 million TPS, but like I could see very clearly that one application is literally going to clog all this up right now. Like I clearly need to get interested in something else if I'm optimistic about people using chains.
Do you have a thesis on what went wrong? Because this is a lot of very smart, very thorough engineers that like this has always been a piece that like I've never gotten a good answer from someone on like why you can make a lot of like I would say slanderous comments about something like Solana or Sui or Aptos or BNB making lavish claims about capacity and throughput numbers and being like, well, these are just a bunch of like alt L1s that are non-serious about performance and they're just sort of like trying to fake it and make it. But that was not like the people who were talking about 1 million TPS roll-ups in the L2 space. They were people who like were already quite wealthy, had been involved in the space for a while. But the delta there between like, the classic white paper horse drawing was just very, very big in that space. I'm kind of curious if you have any thoughts or views on how that gap maintained so big for so long.
I think it was a mix of kind of self-reinforcing things. I mean, one is something that's like somewhat unique to crypto, where I think the kind of just like community or whatever aspect of it is people end up in these like very cult-like areas. And Ethereum still has this today, but even more so a couple years ago, where there just really isn't a tolerance or interest in having a lot of dissenting thought. There is a very like this is the scripture. This is the way that we scale. This is this is Vitalik's roadmap. This is the right way to do things. And it's just generally not welcome of people like very critically challenging that. That's usually just like not a thing that people want. I think there's more acceptance to it now, but I would say even less of a couple years. Part of that I is probably learning the wrong lessons of looking back in the early days of crypto and just thinking that everything was going to be the same. If you looked in the early days of crypto and even up through then, and you just over analogize everything to Bitcoin, and then you kind of have this hangover of thinking that like, oh, everything that Bitcoin did was the right way to do things, you end up with the right thing to do is to be a decentralization maxi on like all dimensions. It is to just be like very cult-like and very just, very rigid. And like, these are the beliefs that we have and there is no other way to do this. Like we are right in doing this way. So I think that you just like learn a lot of those lessons early on in crypto. It was like looking at what made Bitcoin successful and looking at Ethereum was like very clearly by far ahead of the entire competition.
Oh, completely.
Even in the last cycle.
Yeah.
So everything in the market was telling you like, hey, like this is what you need to do to go build a successful crypto network.
Yeah.
And then even through the bear market, I think that was also very self-reinforcing. It's easy to look at, everything got washed out, that mentality of, oh, all of this stuff on these other chains, like it was all a scam. They were clearly, it was all just centralized infrastructure. These were bad projects. Like the real stuff is being built on Ethereum. And it becomes really easy too when I would say investors reinforce that too, where a lot of just early and like continuing through now, like a lot of the kind of massive just VCs and investors in the space are centered generally around Ethereum. There's a lot of capital being deployed there, and it did perform better even through the bear market compared to most other assets. So you really just had everything in the market, and from looking at historically telling you like, hey, like this is the way that you go build a successful crypto network is by doing all of these things. And so I definitely get how that came about, and I think you just needed to get punched in the face, and that's what's obviously happening the last couple of years. Like, oh no, like there are other credible ways to go build a crypto network that is going to be super successful, and then you need to change.
Yeah, it was interesting. So I was talking with two people who work in crypto for a while. They were co-founders. They've exited, and now part of what they do is run like a a small fund that kind of operates a little bit like a family office. And they were saying that we had all these strong theses in like 2020 around like what types of things we were going to invest in. They invested a bunch in a bunch of stuff back then. And in retrospect, one of them was saying to me, we really should have just said yes to everyone who walked through the door who was not overtly setting off red flags. Because it was a real like rising tide, lift all boats type thing. And it's kind of interesting how much you can still look at that today and sort of say like, oh, this industry is nowhere near maturing because there's so much greenfield opportunity here. I'm really interested in sort of your perspective on like maybe two things here. One is like how you gut check your own assumptions as you move through this so you don't get sort of stuck on a local minimum of a thesis on an industry that's changing every 2 weeks. And then the second part of this was like, do you see like the fundamental dynamics and nature of the projects you guys are investing in or seeing changing? Obviously, they're doing different things than they were doing in 2021. You're getting like less NFT pitches, probably more DePIN pitches, but like, do you see other types of major shifts other than the types of products that are getting built?
So the kind of two parts of that. One, just making sure that you kind of check your assumptions all the time. A lot of that I think I probably get just from by my nature. I am, and also just like rather intentionally, pretty public facing and pretty aggressive and direct in my views. So I will just very naturally end up hearing all the different sides very, very loudly from everyone when I will put all my views on Twitter. I will go do podcasts, and I will certainly invite people to come fight with me. So I think you just naturally end up hearing all the different sides there, which I think is very good.
Yeah.
So that's a pretty like, I would say like natural way that I kind of approach that. And then as far as I mean, the changes there to that point of like the rising tide lifts all boats, that was very much the right sentiment and way to approach things in like 2020 was, it was probably the right thing to basically just like throw money at whatever was not like openly a scam and throwing red flags at you.
Yeah.
Because it really was just, it's very early stage and people are honestly just like throwing money at everything in the industry. We don't really know what's going to work. There's just so much excitement around the industry that it very much was a rising tide lifts all boats. I think you just see way less of that today. And like you see that very literally just in the prices of different projects. The amount of dispersion that you have in projects over the past couple of years is crazy, and it's not what you used to see a couple of years ago, which is why we've been in this weird stage for the last 2 years where it's like, are we in a bull market? Are we not in a bull market?
Yeah.
It's because it is completely dependent on like what area you're in. If you are super focused on like Ethereum infrastructure, it's been a bear market for the last like 2 years. If you're focused on meme coins and like frontier consumer apps like prediction markets, great, we're in a bull market. Same thing if you're a Bitcoin guy, like store value macro guy, we're very firmly in a bull market. And I think the dispersion is like very healthy. That is the mechanism by which you're going to get capital allocated more properly over time. And that's what I think we're in the earlier stages of seeing now, is the market is telling you, hey, you can't just like go fund whatever. You need to be able to fund a project that is going to get a lot of users, that is going to earn real cash flows, that is like actually going to be a valuable service, and that people are going to pay for it and use it. And so the market is picking up to that. Like what are the applications that people care more about now, are talking about, are funding more and getting more interested in? We're figuring out like what are the applications that actually make sense on an investment perspective of what is going to make me my money back? Like what are people going to pay to go use? And sometimes that's the old school stuff that I think we ignored for too long. It's stuff like DeFi. Sometimes it's stuff that people don't like and they want to moralize. And it's stuff like meme coin launch pads. It's all over the place. But the simple theme for all of it is like, you need to build a product that people are going to use and pay for. And so we're finally starting to see capital allocators move in that direction too, which is very healthy.
There's always been a quest in crypto to figure out how do we bring like a PDE ratio to crypto? How do we find something that you can generally apply across a broad base of categories and get something out of that? It felt like for a while that was TVL, and then we realized TVL is a terrible metric. For a while it was economic security, and we realized economic security is a meme, which I think is a statement I can confidently say at this point, and most people won't yell at me, which is very much not the case a year ago. Rev is kind of all the rage now from some folks. Other folks who have it say it's the perfect metric. Folks who don't have it say it's a very flawed metric. I know you've gotten involved in some of these debates. So I want to get some of your thoughts on Rev, but like kind of at a high level, do you think the quest to find the P to E ratio for crypto, is that fundamentally correct, or are we still really too early and people need to sort of stop TradFiing this space?
There's always a little bit of both. I think you want to be open to new ideas, but in general, the industry clearly needs to move way more towards we need standardized financial metrics to like understand what the hell is going on in these networks. Partially just to understand. I mean, even aside from a valuation perspective, you just want to understand like what are users paying for? Just even as a demand signal, where are users actually going? And the dollars that people are paying are a very strong signal. It's much harder to game compared to something like TVL or whatever else.
Yeah.
So I think part of it is that. But yeah, definitely the area that has been historically the trickiest and so the most like controversial in this is that unclear area of these, obviously like the general purpose, call it like L1s, like how do you kind of price these? Because most applications that are very clearly, a smart contract deployed on another chain, like the Aaves of the world, the Skies, the Lidos, the whatever, I feel like people have agreed for a long time that obviously these are going to look pretty much like equities at the end of the day. And that, you're going to need to make money and we're going to price them off of that. Now, yeah. I think that most people would agree if you said that at any point in the last few years. Now, they were never priced that way, actually, at any point in the last few years. People are only like actually starting to do that now. But people conceptually would mostly agree with that statement, even if you said that 4 years ago. Like something like Aave needs to make money for this to be valuable in the long run. Like the token is going to be worth something based on the cash flows it's going to generate, and I'm going to get out of it. So that part is like less controversial. It's just the market to start to price these based on that a little more and not just ignoring that and like pricing things off of narrative. The area where people still just like fundamentally disagree with that categorization is a lot of these general purpose L1 stuff like Ethereum, stuff like Solana. The difficult part is that the reality is it's obviously not priced that way today. All of these like large assets are a very complicated function of multiple factors in practice today. And certainly one of the factors that investors are looking at when they are pricing something like Sol versus something like ETH, and they're thinking about what should be the relative pricing of these, one of the inputs to that function is very clearly, how much money do I make holding this thing? And that is very directly like, what is the REV that this chain is generating? It is, what is the fees and the MEV that I get as a holder? It's not the entire equation. It's not 100%, but it's some percent. And so the important operative question is basically, what do you think that percent is going to be today or in 5 years from now and in 10 years from now? Do you think that at minimum that is going to become a larger input to the function of how we price these things? I believe it certainly will. And if you believe that to be the case, then you like really need to pay attention to this increasingly. Maybe it doesn't end up exactly, this is 100% the only thing that people pay attention to. Maybe there are these commodity-like properties that are somewhat durable for these assets and you get some premium or some different part of it that you need to think about. But at minimum, it's starting to become like very increasingly clear that this is a major contributor to like how these assets are going to be valued. And it's probably only going to grow in importance as the space matures, as you get more TradFi allocators who are coming in, who are trying to understand these assets and are going to be, realistically, a lot of the froth is going to get pulled out of the market. And as there's a lot more projects to invest in, and then you need to justify your valuation. And that's going to be a function of what are you actually generating at the end of the day? And so this is a lot of what Ethereum has struggled with, obviously, for the last couple of years, is even if it's not Sol being priced on a very literal DCF today, which I would say it's not. I would say that something like Sol is probably at least very aggressively priced if you are valuing it based on cash flows alone. Like you can get there, but it's at least aggressively priced. But in practice, what is a lot of the back of the envelope math that people are doing over the past couple of years, I think, is they're looking at what is the ratio of like ETH Sol market caps. Is it 5 to 1? Is it 10 to 1 at different times? And then it's like looking at but this one is earning more money. And so I don't know what the perfect absolute value is for these two things, but if ETH is worth 10x more and this other one is generating like just as much money, my guess is that ratio is probably going to compress. Yeah. And so I think that's a lot of the bet that you saw people taking over the past, call it year or two, was less about an absolute value of like, what is the proper value even of Sol? It's just like very clear that this is one of, if not the most important contributors to what should the price be. And as a result of that saying, hey, I think Sol ETH should be going up. I don't even know what the perfect absolute value is, but this should probably compress because this is one of the most important metrics. And like, this is clearly the direction that it's going. And I think I think that's only going to go more in that direction, where this is going to be a really important metric for valuing these things, which people mostly don't like because you probably can't really justify as high valuations as some of these protocols have based on that alone.
Yeah, it's kind of interesting because, that would sort of lead to the conclusion that pumped out fun is massively underpriced. And Bitcoin is probably massively overpriced.
So the part that ends up
Bitcoin
annoying,
breaks everything. Yes.
Yeah, exactly. That is the part that always is the sticking point when you argue with, I would say, particularly like Ethereum and ETH-centric people over this.
Yeah.
Is, are you willing to just take the leap of faith, or whatever we want to call it, that like Bitcoin is just different? We have all socially agreed that a different set of rules applies to Bitcoin. Like, we're just treating it as a different thing in the way that gold has a much higher like monetary premium over its utility value compared to other metals. Like, silver is worth something, but it doesn't get the same, just like abstract monetary premium built up over time. And like, I would say that is the sticking point for so many people, is like Ethereum people in general. Well, I'd say ETH people in general, because I would say that also ETH and Ethereum are increasingly becoming decoupled. Like most like very ETH heavy people will say like, there's nothing fundamentally special about Bitcoin. Like, why shouldn't we be better? It's because, and fairness to them, it is the same argument that I just applied from Sol versus ETH. It's like, hey, I don't know what the perfect absolute value is, but like, this one is clearly better than this one on some of the attributes that matter. ETH has real yield that Bitcoin doesn't have. So it's got like better economics in these things. And that's why this becomes really complicated. It's because this is very clearly a very complicated function of multiple factors.
Yeah.
And how you weight them, like, it becomes very difficult. I think in practice, at least what the world has been saying to us, and where I generally fall in the camp of, is like Bitcoin is just getting such a different treatment, because this is just how society and people work. Is like, we want a money and then we just treat that thing as special and it's easy. We don't want 100 different monies. It's just like, this is the money. And then like, these are the assets that I'm going to go invest in on cash flows. It's like, when there's global uncertainty about the trade war over the past few months, and like people are saying like, oh, I want to go buy a non-sovereign asset that like represents my, I don't want to worry about fiat currencies or whatever, but like I want to be digital first. Like, you just go buy Bitcoin. There's
Right.
no need for you to go buy the second and the third and the fourth.
You're not buying
Exactly.
Sol. You're not buying Ether. Yeah.
Exactly. And so that's where it always ends up being tricky, is like, that's a very subjective argument. And it's like, I just treat that one as special because in practice, that is the way that humans work.
Oh,
it's
yeah.
Like they tend to treat that one thing as special.
I mean, I think Bitcoin would be worth a third as much as it is if it had a DAO, for example.
Yeah.
Like the lack of anyone's ability to change the thing is the feature, not the bug.
Yeah.
Yeah. It's interesting. I'm kind of curious, kind of to going like, I'd say as far afield as you can get from Bitcoin while still staying in the crypto camp. I'm curious how you viewed the rise of Hyperliquid. Were you an early, because there was this whole thing, and like, I'm not sure if I mid-curved this or if just the thesis hasn't played out yet, but I was like, this is a very interesting product. It's closed source. You can't run a node. And like, not even like you can't join the consensus group, but you can't run a node, and they all have to run in the same data center in Tokyo. Now, a few of those things have changed since it first came on the scene, but I think I looked at this and was like, this is the world's worst blockchain that anyone's ever built. And I think a lot of other people looked at it and said, this is the world's best centralized exchange that anyone has ever built. And like, I think that there's like a very classic thing there of like, as you're talking about, like, cultish in grouping, the generals are always fighting the last war. Like, I think that was my initial view of it, and I was just had the wrong paradigm. So, but I'm kind of curious, because I know you've obviously been spending a lot of time tweeting and thinking about Hyperliquid. Like, how did your thinking on it change or evolve from, the product that launched a year and a half ago to the thing that's number 12 or 13 on the market cap chart today?
Yeah, so fitting to me, I have tended to annoy pretty much everyone at one point or another in this debate.
Yeah.
I'd say one of the things that was emblematic for me was it was last year. Like at some point, like probably a little after the token launched, where it was I'm trying to remember. It was, yeah, I won't name him, but it was someone who was tweeting out something along the lines of like, this is this clearly, centralized product, like Solana is the real decentralized product or whatever. So something along those lines. I don't remember the exact wording. And I quote tweeting it, basically just saying like Ethereum is to Solana as Solana is to Hyperliquid. It was just like, I'm seeing people say the exact same
Yes,
things.
100%.
This is like literally like word for word is what Ethereum people have been saying about Solana for the last 3 years. I was like, I have been on both sides of this. Like I've seen this message a million times.
Yep.
And I was talking to them about it after, and they were very reasonably pointing out these like, this is, not great to promote these values of, it's very centralized. We can't even see the code. This is closed source. And I'm like, I totally agree with you. Just like totally understand. I don't think that those things are good. I don't like, I would like them to change these things. And they were very much pushing on this idea of like, this is a sex. This just like literally isn't a dex. And I was just like being very deliberate. I was like, I'm being very intentional in my language. I do not call it a sex or a dex whenever I talk about it. It is just an exchange. I don't care. Like, call it what you want. It is this spectrum of qualities.
Sure.
This thing is like clearly different in some technical ways, meaningfully from like Binance, but it's also obviously not Solana on the other end. But like it's a product that people use. And so I'm not going to ascribe any value judgment to it when I'm just assessing like, is this an investable asset? Now, putting aside the investment part of it, I would like things to change about Hyperliquid because I do think that they can potentially set bad precedents for the industry. I do not think that you should be able to be closed source and benefit from like saying that you are decentralized and are exempted from, and should have very different treatment from like how a centralized custodian over funds would be treated. This is what gets to, I think, one of the most important things in the industry right now, very obviously, is the regulation that does need to come to the industry. And this is one of the very core questions where I've spoken to the regulators about this who are like trying to put together this language. And it is a job that I do not envy because it is really, really difficult. How do you define what is a decentralized system versus a centralized, or a mature versus immature? Like there's different language to use around it. System, like where do you actually set that line of this clearly deserves a different treatment, and this is not a centralized service which should be KYCing users and custodying funds, and that's a very difficult thing to do.
It gets awkward very quickly too, because there's actually very few blockchains where you can just run a block producer, if we're being honest, right? It's like, now, there's lots of criticisms of Solana's economics, but you can run a block producer with a stake of 1 SOL. You're not going to break even on it, but like there are many other networks that have a $20 million, $100 million minimum bond you have to put up to even run a block producer, or let alone you have to like know the founder and be in a Telegram group with them to like be approved. And so I've noticed it's a hard thing for the industry to push back on, because like all the L2s that are sort of saying, oh, well, it's terrible because of this. It's like, well, no one can run a sequencer. There's no state committees, like a whole bunch of these other things changed. And so there's kind of this like interesting piece where I don't know if the tide's going to go out and we're going to see a lot of people are swimming naked, or if this is actually like, they've just done the thing which is taken into the thing that crypto always does, right? Which is it takes something that pre-exists in the non-crypto world and it just strips it down to its most bare raw elements and supercharges it. I think it's really hard to argue that Polymarkets is somehow worse than DraftKings, right? Like it's the logical conclusion of sports betting.
Yeah.
So it's interesting. Like I do sort of share a bit of your like concerns that are like, there's like a pearl clutching moment of like, oh, is this going to set bad precedent for the industry? And you're like, well, FTX and Terra kind of already did that.
Yeah, exactly. Yeah. I think it will be a healthy evolution, because where you will just end up needing to draw the line somewhere is, what is the point that like actually impacts users? What are the things that I, as a user, if I'm concerned about the security of my funds, like what are the things that I should know? And those minimum viable things are the things that should be disclosed and be like minimum requirements for being considered a decentralized, or whatever we want to call it, system that gets like, that does get different treatment of like, hey, you are not literally just a centralized counterparty that controls my funds. And crypto is like, it's it's always pushing the boundary of there are what is regulatory arbitrage versus just actually making regulations just not needed anymore. And that is what like a lot of these protocols I think are pushing the line of, is like that is the negative argument for crypto, is like, it's just all regulatory arbitrage. It's just like we make a bunch of complicated things so that we could like try to confuse everyone and say like, oh, like, and then try to avoid securities laws or whatever else, but like, oh, it's a centralized thing. That's the very like pessimistic view. And then the optimistic view is, no, if you just like actually build a system in the correct way, it just gets rid of those concerns that those regulations were created in the first place for, such that like they fundamentally don't make sense anymore because we have just solved them in a better way.
Yeah.
The simple reality is crypto's like actually doing both of those things. And that's why it's like, it's very messy. Like where do you place the line on a lot of these things? And so that's going to be the iterative process that we're continually figuring out.
Yeah. Do you think crypto, coming from a traditional finance background, do you think crypto is fundamentally different from a technology stack where it needs fewer regulations, or it's just simply not as mature, and all of the incentives that sometimes cause TradFi to do bad things? It's just there's a human nature component of this where like we can't solve this with technology.
I think it definitely is fundamentally different in a lot of ways, which particularly relate to what are the things that like I as a user should know to have some specific guarantees. Like if you are going to custody my funds as a centralized entity, there are certain things I want to know about you as an entity. Like I want to know that you are being audited and you didn't just like take my money and run away with it, that you have good security practices, all of those things. Like things that centralized custodians of people's money like should have to abide by.
Yeah.
And to the extent that you can create technology that just gets rid of those concerns fundamentally, because this is a decentralized system where, hey, the box that I put my money into like literally can't take my money. There is no person that can take my money out of it, and I can audit it myself. You obviously just like you obviate the need for, setting these audit requirements of like, this is what you need to provide. It's like, I can literally see it myself. There's no one to give me the, hey, here's the audit report of the entity that you gave your money to. So there are areas where we can clearly just like make it not relevant anymore.
What about when you look at something like the Ronin Bridge hack, right? Which I don't think most people would have considered Axie to be like a custodial service, but a bridge at the end of the day is. Or if you look at some of these situations where there's like a DeFi protocol that has a bug in it and someone's able to exploit that bug. And I guess the reason that like I think this is an interesting one is we sort of separate the idea of like Uniswap is non-custodial, Binance is custodial. And to some extent, perfectly clear definition. To another extent, well, if you're an LP in Uniswap, like it's not custodial in the sense that it like can approve or deny your transfer request, but it is custodial in that if Uniswap gets hacked, you are still exposed. And sometimes they're like what happened with Mango Markets, which is not like someone cracked the smart contract holding funds. They were just able to manipulate the protocol in a certain way. And I'm kind of curious, when you look at like regulation, where's the right balance come down on that? Because you could look at something like like WETH is such a great example, right? If wrapped ether, if there's a bug in wrapped ether, that is like a not an extinction level event, but it's a 5-alarm fire for the entire Ethereum ecosystem. And that's a non-custodial program that I think many people would consider like it would be insane if everyone using WETH had to KYC.
Yeah. So I think it's going to be messy, but I think that you can just set guidelines fundamentally for these things. I think the first example is the easier one of them, something like the Ronin Bridge, where I would just consider that a pseudo-centralized system. I do not think that I don't remember the exact numbers on it, but call it a 3 of 4, 3 of 5, whatever, 4 of 6 multi-sig, whatever it was, where it was like the team controlling all of them. I think that is something where you can very easily just like, you literally just set guidelines. And this is what they're trying to do in the bills that are like going through Congress and that regulators are considering is, literally setting guidelines on, no one party should have control of more than like 20% of the network or that kind of thing. And so you are just literally setting a guideline of like, hey, maybe you need 10 parties and they all need to be logically different parties, or maybe you need 9, or maybe you need 20. Like there is some reasonable number where we can just say that, hey, like this is actually a sufficiently decentralized system such that it's not realistic for them to coordinate. There's no one person that's going to take my money. I think we can all reasonably agree that like a 3 of 5 where the team actually controls all 5 of them does not meet that criteria. That's terrible. But yeah, so that one I think is like actually
You
you
need
can
at
get
least
rid
as
of.
many multi-sig members as we have Supreme Court justices.
Yeah, that would be a good one. And so that one I find like a little bit easier. I think it's going to be, what is the right number? Is it no one person should control 20%? Is it 10%? Is it 25%? I don't know. But like you're going to pick a number and it'll be reasonable enough and it'll be fine. For the like being able to steal your money to get hacked, like I would, it's not centralized control of the fund still. It's just like you put your money in a bad thing. And this is where it gets more towards the kind of like disclosure requirements of this is one of the areas where I think that like being source available code is very helpful, because then you are like all the information is out there, and then it's up to the consumer and the free market to figure out like, is this a safe thing to put your money into? Like if the code is out there and this is an audited protocol, like you can choose to take the risk of this or not. Like I am able to accurately assess what is going on in the same way that like I know that this company is being audited and they have some level of assurance. It's still possible that, they might steal my money at the end of the day because they lied and got around the auditors. And that could always happen in a decentralized protocol too. Like maybe the audit was wrong. But like it is the information is out there for you to figure that out. And I think that is the kind of thing that like is a minimum level of we should be really pushing for that. And I think it is valuable.
Yeah, like we're never going to solve an Enron problem, right? Where the accounting firm signs off on mark-to-market accounting and they just take it to an insane end state. Like that is not a problem. But it's kind of interesting because there's a lot of, like I fundamentally agree with you. I've just been spending a lot of time with people who don't. And it's been very interesting to sort of have to address some of these concepts, like, the source code being available is useful and interesting. And there's a lot of like words we can put behind it on how it's better than the source not being available. But I'm not sure it absolves responsibility in the way that historically it kind of has. But we've seen that start to change, I think. And so I sort of wonder, one of the incredible things about crypto is 15 people can create a $7 billion company. And it can still have 15 people at the end of the day. But like I was talking with Cash from Jupiter recently on the podcast, and like they have 7 people, I think, that work in customer support, which is just fascinating for a DEX to have customer support representatives. And so I'm kind of curious, like, before we kind of wrap up here, like, what are some of these like trends or changes or like, I would call them like non-consensus bets, like big or small, that you sort of see the industry moving in? One I would say is like having talked to the Cash and Jupiter is like, I think a lot more DeFi protocols will have customer support, and it's not going to look like Coinbase customer support. Maybe bad example. It's not going to look like your Web2 customer support. It's not like they're undoing people's transactions, but it's like, oh yeah, here's what happened. You set your slippage tolerance super high because you thought this was a different number. Like almost more of like explaining to people how they rug themselves. Like, yeah. What are areas you see of something similar?
I think you can extend that to most areas and map it to what companies look like today, and I think most of them will apply. Most of the things that companies do, like they do make sense for a reason, and there are plenty of things that they are doing to that point earlier. Like hopefully these are literally fundamentally replaced by technology. But customer service is not replaced by a blockchain. If I'm using this product and I don't know what the hell is going on and the thing isn't working, I need someone to answer that question for me. A blockchain is not answering that question for me.
Yeah.
And so the things that should get kind of removed from a company in the long run are the things that like very obviously the technology actually solves. No one solved customer service by putting a thing on a blockchain. And so what are the other kind of like people services that are necessary? One of the other ones I've talked about, and I think we're definitely going to see, and there's a push in this direction, is like similar to customer service, investor relations. I think the protocols are going to and are absolutely going to need to build this out. Like there's a reason this exists in the traditional world, is because as an investor in these protocols, I want to understand the information and be able to interpret it properly. And so it's going to need to be someone's job to say like, hey, we need to put together standardized financial reporting for this company. Like, here is our quarterly financials that we are putting out and like nicely presented. And there's a person that can answer questions for you when you're like, hey, I need to find this thing, or please explain this to me. Please explain to me something about the protocol. Like, there needs to be some touch point and some human like just work put into that. The blockchain doesn't just spit out at you a perfectly formatted financial statement and a presentation around that and how to interpret these. Like, people still need to do those roles, and so that is one of the really big areas that I think we're like definitely going to need to see. There's some early protocols that already do like some versions of this, and definitely very optimistic. I've had these conversations with multiple protocols now over the past few months who have proactively asked stuff along these lines of like, hey, we are thinking about building out a more proper official investor relations function, like very literally, and we're trying to figure out like what as a fund that is looking at investing in these projects, like what are the things that you want to see and to learn? Is it standardized financial reporting? Is it quarterly calls? Is it a certain presentation format? Like, what are the things that are going to matter? And I think the boring answer is like most of it's going to look like just go look at any public company. Like, what does their investor relations look like? It's going to be the same ideas.
Yeah.
All of that stuff works for a reason.
Yeah. Interesting. Yeah, it's just a market distortion that if you use the I word, the lawyers told you the SEC would go after you. But
yes.
Fundamentally, people still want that information.
Yeah. And this is one of those areas where I understand why a lot of it has not existed.
Yeah.
Obviously, like because there are these regulatory gray areas and problems, like you don't want to get yourself in trouble the last few years. Finally, now that we are entering an environment where one, investors care more about this, so there's going to be more demand for it. Like, investors are just looking at fundamentals more. And we are in an environment where you don't have to be afraid of everything that you put out is like, Gary's going to be sending you a Wells notice like right after. So there's like actual real engagement for regulators to get this right, because it's obviously not a good outcome if everyone is too afraid to give like proper disclosures. Like that is what we want. That is what we want them to do. And that was the very perverse incentive that we created over the last few years. It was like you were literally incentivizing people to not like disclose more things about this as an investment. And so people just had to act on less information. That's like obviously a bad thing for consumers.
Yeah, it's
and we're finally getting to a point.
It's this very interesting thing where like if we just approved ETFs in 2020, I think the amount of money lost in FTX would have been much smaller, because suddenly all these retail investors, they're coming into regulated financial products. They're not coming into an exchange based in the Bahamas.
Yeah. I'm finally positive on where we're going. There's a lot more demand for all of these kind of things. Like, people have seen the problems of like what happens when you put your money into an FTX or whatever. What happens when you just like invest blindly without proper disclosures and you get kind of rugged on these things. So there's more demand, certainly from the investor and the consumer side of this. And there really is just genuine interest from regulators at this point of like getting this right. And there is real outreach in getting all of this stuff done. So finally super positive on it for hopefully the next, 6 months, year, 2 years. Like it's going to be a long road getting all of this ironed out, but it's going to be super positive.
Awesome. I also remain hopeful on government engagement and bringing crypto back to the US.
Yeah.
Awesome.
Should be fun.
Well, Jon, if people enjoyed this, where can they find more of the stuff that you do?
Twitter is where I will be ranting and saying ridiculous things, so please come fight with me there. I am Jon Charbonneau on Twitter. And for my longer form, nicer writing, you can go to dba.xyz and read more about us.
Awesome. Thanks for joining us today on Validated.
Yeah, it was a ton of fun. Thanks for having me.
Thanks.